Yeah, so as usual, is the FOMC again. We were having a bit of chit chat before the session started, right? So, okay, so I already give some highlights on what I talk about, what I saw in FOMC, right? Maybe from your perspective as interest rate, you are very sensitive to interest rate, right? Because you do
I am
mortgage,
my
um,
entire bread and butter,
yeah,
basically.
your entire bread and butter, right? So, what was your main takeaway, or perhaps what shocked you the most?
I was very shocked that he turned head like that. Hello, everybody.
Hey, hi, hi, Ethan. Thanks for joining us.
Hey, pleasure. Thank you for bringing me here again.
What shocked you the most?
I was very shocked that he turned head like that.
Yeah.
I think everybody in the market expected, oh, Kevin Watts this is gonna be a Donald Trump guy. He's gonna listen to Donald Trump, going to cut rates and
Be
what have
very dovish, lah, right?
Yeah, I would think that he was like, okay, maybe this round hold, but then we continue the rate going down. Maybe talk a little bit about the AI replacement of jobs. Maybe talk about the interest rate, the inflation being transitory.
Yeah,
But I was really surprised that he didn't really touch on that at all. He
yeah, yeah,
just he just say that inflation is a monster that we all are very focused to take down. He basically didn't
yeah,
talk that much about unemployment.
yeah. I was really shocked by that, to be honest.
Yeah, me too. I'm like, oh, and I woke up at like 5 plus a.m. and going to see, wow, good morning, yeah. But
Yeah, because when okay, so for everyone's benefit, right? When Kevin Walsh first go on the standard to get confirmation, he was using like what Ethan said, right? All the AI thing to say that okay, we're going to control inflation because our productivity is going to be so high, right? And basically laying the path to allow him to lower interest rate, right? So everyone coming in thought that he will follow the script that Donald Trump gave him, basically, right? But lo and behold, it wasn't the case, right? He reverted back to his old style, right? He was known as a very hawkish governor. In fact, he was one of the governor back in 2000, I think year 2000 or 2008, I can't remember which year, where he quit being one of the 12 governors on the Federal Reserve because he didn't agree with the whole quantitative easing, right? So he was originally a very hawkish guy. Donald Trump thought that he could change, but now he's gone full on, right? Gone full on. Okay. So Ethan, from your view, right? Maybe from a mortgage perspective, right? Have you seen the bank reacting to this news? Although it just came out yesterday, lah.
that's the good thing. That's the advantage that I bring to you guys. See, the economists inside the bank, right, will have to take a few days to think about this, come up with meetings, come up with plans, product will need to launch, everything need to approve. But right now on the ground, right, when they are reacting, right, when they're taking their time, what I told Pete was, right, hey, let's lock in the rates right now.
Yeah,
There are some things that might happen where, especially when there is such a big change of event. If everything is
yeah,
ceteris paribus, nothing changed, everything following the plan, okay, nothing's going to happen. It's going to be one of those boring days.
hmm.
And to be really honest, I expected this to be a boring day, but wow, good morning, man. So what I think is for this FOMC, if you were to engage my services, me and my team will reach out to you as soon as we can because we
Hmm.
want to secure the rates for you lah.
Yeah.
Later we will talk a little bit about whether to look at fixed rate or floating rate and how my projections are going to be like, what should we do and all that fun stuff. All right.
I
So
think you're maybe we touched on that, right? Previously, I think Ethan and I always have a slight disagreement because I always tell him that I prefer fixed rate because the rate so low already, just fix it lah, don't need to. But Ethan was of the view that maybe interest rate coming down, so maybe don't go fixed rate, we go floating. Anyway, floating is lower than fixed at that point. I don't know whether still it is lah, but
still is,
yeah,
still
still is
is.
lah, still is. So the savings actually is quite substantial. Okay.
Mm,
So maybe let's talk about that, right, Ethan? Has this Federal Reserve rate hawkishness, maybe not, maybe haven't hiked yet, has
mm.
it changed your perspective on that?
It depends on the loan size. Okay. So
Okay.
what I like to see, right, is everybody is different, everybody is unique, everybody got
Yes.
different risk appetite. Some
Yeah.
people like to do all the butterfly spreads lah. Some people like to, do all the fancy stuff, and some
No, no,
people
we
like
we
to buy
in this
straight.
channel, we don't do those. We just do simple stuff.
Yeah. this channel, but everybody's different.
Yeah, yeah,
You know,
true, true, true.
everybody within the channel is different. So
Yeah,
what
yeah.
we do is a lot of like accommodating to everybody's different beliefs, everybody's different perspective and everything. So to predict Singapore interest rate is more interesting than just FOMC, although
It's even
FOMC
harder than FOMC, to be
is
honest.
very tough, bro. But the thing
Yeah.
is, I went full retard into this, and I think after all the times that we have tried to predict rate, I think we've done so with pretty good accuracy at this
Mm,
point in time.
yeah.
So yeah, let's fingers crossed and keep it going, man.
Okay. Before I ask Ethan to share the current rates for you guys to take a look, how many of y'all here are right now in my position as well, right? You are kind of like remortgaging, settling your loans and stuff like that. Okay. So for those of you who are, okay, Steve already have a question later, we'll touch on that, right? If you have a refinancing happening or a new loan happening, all right, can you type yes in the chat? Okay, so we know that how many of y'all are looking at this very closely, lah, right? Even if you don't have a new loan, if you have an existing loan, you might want to look at refinancing, okay? Right?
then then later we can also talk slightly about taking out money to put inside CPF or do other things to get a higher return. But all the exciting stuff is
Mm,
going to come up in our slides later. Okay.
can. Okay, okay. So, well, only Steve and Michael, the rest of you are not in the mortgage world. Cannot be, right?
HDB 2.6, but then mortgages right now about 1+%.
Yeah,
So
yeah,
maybe you might want to save on that too.
yeah.
Quick answer on Steve
Mm,
and Michael.
yeah.
Next mortgage refinancing mid-October, 3 months in advance, it will be good. All
Yes.
right. Michael, refinancing coming, tolong, reach out. I want to be able to help you save as much as we can.
Mm.
Um,
I just put the link in the chat. Yeah.
just refinance fixed rate for the last 5 years. Why? But it's okay. It's okay. It's okay still. It's okay. It's okay. What rate do you get? I'm very
I
curious.
hope you got a good rate. I hope you got
I
a good
hope you
rate.
get a good rate. I
Yeah.
hope you don't lock in too much. And 1.88 depends on loan size and depends on philosophy
Oh,
lah.
got
Some
five. Now they do 5 years, Ethan. I didn't realize that. I always
they
see like
do,
three
they
or four.
do, they do. Now 1.35 also have, Michael. But lock until next year. Don't worry. Get in touch first. Then later we will be friends.
Okay, okay.
You
EL's
know?
loan size very small, so okay to lock. Okay to lock. Yeah, yeah. Okay to lock.
130 okay to lock.
Yes, yes, yes.
Take your time to pay. Remember, 1.88 is a lot cheaper than your CPF is paying you at 2.5. Take your time. Can extend your loan tenure, extend your loan tenure.
Yeah.
But yeah,
Okay,
we'll chat
so
more.
so maybe Ethan, you want to share your slides at this point in time. I think everyone is very curious to know what are the current rates like. Because I think
Apologies. Got too excited.
okay,
All right,
Jerome
everybody can see the
Powell.
slides, right?
Wow, suddenly I miss him, eh.
I also miss him, yeah. I also miss him. But that's why this is the tribute. Jerome Powell no more. Now Kevin Walsh.
Oh,
Okay, exciting time, guys. Okay, so part one, let's talk about the economy, what's happening, and how we can do this.
oh,
Myself, I'm from Unbeatable Mortgage. We specialize in bank loans in Singapore. We work with all the banks to be able to get you the best rates possible with your highest approval because every single bank value you very differently. And not just that, we also have our proven framework, which I will talk about later. But why us? Our clients love us a lot because we also put in a lot more effort into our advice lah. We talk to them we are not just a mama shop. We say okay, we got cheap rates, come over. Sometimes we talk about what to do in terms of your housing portfolio, how to be able to retire and all that kind of fun stuff because this is one of your biggest expense. So yes, we do care a lot about our clients and that's why they care about us too. So the framework that we have, right, number one, right, we need to be able to support you because whatever we do, right, it is based on your property. If you're gonna sell your property or whatsoever, very important to talk to us too. If
hmm,
you want to plan, like especially when you're going to buy a new property, it is properly important to structure it properly. Like if you were to buy a HDB, one owner, one occupier, then you can buy a condo, then you can own one HDB, one condo. But all this kind of exciting advice would be very, very personal to everybody. Therefore, today we want to talk something a bit more broader, which is to help you pick the best rate, something that everybody can relate to. Yeah.
yeah.
Okay. So to choose fixed or floating, right? This is what we want to talk about. Current market today, the SORA is at 0.81, but we look at the 1 month is about 1%. 3 month SORA is 1.08. So if we're looking at the spread of 0.2, we are seeing a little bit lower. However, like I said, 1.35 is over here, and if there are a little bit of like uncertainty in the market, it is okay to pay a slight premium to hedge your downside,
Yeah.
right? If your sell call is cheap and you don't know whether the market is coming in, you might want to do it, you know.
Mm.
Mm. So, disclaimer: we are not fortune tellers. I can do a little bit of magic, increase your loan size, increase the amount of money that you get, but we are not fortune tellers. All right, we are just very hardworking lah. All right, and you're about to see what we do. Okay, so how does interest rates in Singapore move? Got this entire exchange rate policy, but basically we see what Singapore dollar is who Singapore is working with more, our trade partners. And more importantly, we are slightly below US interest rate. We look at what monetary policy decision was made, which was on 14 April, is that they increased the slope slightly, which means they want to increase the interest rate by a little bit.
Mm.
Okay. So why is the FOMC important? Because of this one statement in the monetary policy. MAS gives up control over domestic interest rates, and domestic interest rates have typically been below US interest rate. Okay, we don't control domestic interest rate below US interest rate. Federal funds rate almost directly affect SORA rates. Of course, we also have supply demand and all the geopolitical things lah. So that's why it becomes a little bit hard to predict where SORA is going to be. But with me, I have a 5,000 line Excel spreadsheet
Wow.
that is going to be able to give us a little bit of an edge. Okay, so our FOMC projections. This is our latest inflation data. As you can see, the latest 3 years, this is one of the all-time highs. Okay, this is the broad market inflation. Is there still transitory inflation? I don't know yet. We've got to wait and see, but the Fed actually just tell us that they are gonna put a very keen eye on this, so we don't know how it's going to really play out. But
Mm.
more importantly, right, we want to be able to see what's going to happen based on what they expect out of the market. This time it was a little bit different from our March projection. Our March projection was 3.4, 3.1, 3.1. So at the end of this year, they wanted to cut one time. At the end of next year, they want to cut one more time.
One more time, yes.
But now the narrative got flipped.
Change. Totally flip. Yeah.
The narrative got flipped. They say this year might increase, then after
One
that
time.
next year may drop. And then depends on how they want to see it lah. Okay. And based on this, right, we want to be able to understand the sentiment behind all of these people when they are actually putting in their dot plots. So our current range is over here. This is the number of people that say, okay, guys, let's just keep the rates where it is, and then let's have a wait and see approach. But there are a few people that are more keen on increasing interest rate to bring down the inflation lah. So this is what we see over this year in 2027. Honestly, they are a little bit mixed, but they also want interest rate to go up quite a bit lah. After that, they want interest rate to come down because I think by then the unemployment rate will be a bit of more of a concern already. Okay, so this is what we had about 2 meetings ago. I always tell people I have a 52% accuracy. This is my 2 cents worth. What we can do is what we will do today. And as you can see, Luckily, the chart look almost the same as today lah. What we expected actually came true. So what I expect is still the same for interest rates to be below 1%. Around right now, as you can see, based on the current data, we are looking at interest rates to be around this level, about SORA to be about 1% plus minus a little bit. I feel it's going to drop a little bit, it's going to hover around this range and then drop a little bit over the next few years. And a lot of people are very concerned about interest rate going up higher than maybe 2% or 3%. But as you can see over here, if we are looking at the lines, okay, this is the 1 second.
This is the 2% line, right?
This is the 2% line. This is
Yeah.
the 3% line, as you all can roughly see from my drawing. It doesn't go above these two lines that often.
Mm.
So that brings us to our golden question again, whether to choose fixed rate or to choose floating rate. Once again, this is going to be very, very unique for everybody. But what we want to do is give you the exact numbers on how to decide. And for that, we actually count for you. Okay, so the choice is if you got $1 million in loan, what you might want to, if you got multiple millions, then you just use the million times. But just reach out to me, lah. I'll be able to get you exact numbers. Okay, so if you're looking at 1 month SORA plus 0.2, you're probably looking at 1.23% there about for 2 years. Okay, because year one is going to be 1.01 to 1.05, and then year two 1.05 to
1%. Yeah.
1.0, so approximately there. So we are choosing between the SORA plus 0.2 versus the 2-year fix at 1.4. This decision is a $3,329 decision.
Per year
Whether
or per month? Per year, right?
over 2 years.
Over 2 years. Okay, okay.
3,000 trip, half a Hokkaido trip lah. So the difference is 0.17%.
Maybe at this point in time, Ethan, sorry to interject you. Maybe let me just do a quick poll for everybody, right? For those of you who are looking at refinancing or you're taking a new loan, okay,
Mm.
based on what Ethan has just mentioned here, okay, although this is a loan size of 1 million, but you can adjust it to your own requirement. Would you choose fixed or floating? Okay, so type your answer in the chat, right? Will you choose fixed or float? Okay, both are F, so don't type F. Okay, so you must type fixed or float. All right. Okay. And let's see how many fixed, how many float, right? Okay, depending on your situation, we don't know, but just give your preference at this point in time. Okay. Yeah. So I see a few fixed. There's people who are going for float as well, right? So I would say, like what Ethan mentioned, it really depends on your situation and also what is your risk appetite. Okay. Because for myself, even though I fixed it quite some time ago, my previous loan, I think 3 years ago, right? But I can tell you, I would have done so much better, right? A lot more cash, if I just go for the floating. Okay. So it really depends on what is your loan size and what is your time horizon. Okay. So whether you are looking at fixed or float right now, I would strongly encourage you talk to Ethan. Anyway, he's providing a free consultation for all my Invest with Pete members, all right, to look at your existing loan or your new loan and give you mortgage, in terms of mortgage, some of his expertise. All right. So I'm going to just put a link in the chat for those of you who need it. And one thing why I keep bringing back Ethan, right, is because I always get very good feedback from the students. They always say, wow, Ethan is really looking out for us, looking at what we need. And a lot of times when, even though some of the suggestion is like, oh, don't need to do anything, right? Then Ethan will still say the same, like don't need to do anything, even though by saying that actually Ethan doesn't get to benefit, right? But right now, for those of you who are looking at a new loan or refinancing, I think it's a very crucial moment because we are looking at a Fed chair that is getting a bit hawkish. Yeah. So for me, I'm more inclined towards fix again in my new loan, okay? Right. So Roy was a customer of Ethan, so Roy can verify on that as well. Right. Okay.
Thank you
Okay,
very
Ethan,
much.
sorry to interrupt. Okay, continue.
Please interrupt away. We want to have a fun conversation. Yeah. So definitely lah. Like for Pete, right? You see, yourself, maybe you're looking at the different people got different interest rate.
Mm.
If your spread, the difference is only 0 point something, right? I think your brain space is much needed elsewhere,
Yes, correct.
right? There is not a lot to profit, but
Mm.
we also don't know whether if it will go down lower. At
Yeah.
this point of time, like I said, there's a little bit of dark clouds out there. It doesn't hurt to take an umbrella out.
Mm.
However, if you want to save that money, I think it is also pretty okay. Mm.
Hey, Ethan, just to check because I got a DM from one of them. The
Huh?
question is, how many years of lock-in can we fix? Like from
Mm.
what I usually know is 2 years, 3 years. I think
Mm.
just now there was also 5 years, right? So
About
what are
five
the
years
what are the
or
different
1 year.
periods that we're looking at?
Okay, there is 1 years, but then the 1 year one
A bit lame lah. 1 year is a bit lame lah.
is okay for certain levels.
Certain
I
level lah, certain level.
for certain level, got one fella repricing was 1.45 first year fix. The second year is Sora plus 0.4.
Mm,
Then but the alternative is 1.6. And the thing is, he said, okay, I'm not very sure whether 1.6 or do the other one. Then I talked to him a little bit. He said, okay, I am leaning towards 1.4, not very sure. But after Kevin Walsh come, I tell him, wait for the Kevin Walsh to talk first. And now we still got time, we wait until Kevin Walsh talk first, then after that, then we
yeah,
decide.
yeah.
Then he said, okay. I tell you what, we do the 1.6. Now we not very
Mm,
sure.
yeah.
So everybody's a little bit different and everybody has different risk appetite. And because of that, right, the advice I give to everybody will be slightly different. I very
Definitely.
not pushy, but you want to go fix, you go fix. You want to go floating, you go floating. There's no judgment over here. It's
Mm,
all it's a safe space lah. Speaking of safe space, everything you tell me, I don't necessarily have to tell the banker.
yep.
So
Very important.
our conversation is private, and confidential. All
Yes.
right. We
So
abide by the
especially
Banking Secrecy Act. Yeah.
Oh, yes, yes. Especially for those of you who need a bit of creative structure towards your loan and financing, right? Yeah. So we can't really go through that in public sphere, but if you have any of these issue, like for example, is it one name, two name, how many percent, how to increase the loan amount, things like that, do talk to Ethan privately, right? Then he can share with you some of his tricks up his sleeve. Lah. Okay.
In some circles, I'm known as the magician.
Okay, later we see you play cards with us. Okay,
Yeah.
Jui Hyang has a question about the Kevin Walsh, right? The new chairman may have to suck up to Trump. Okay, so the thing is this. Okay, I'll let Ethan continue, but very quickly, is that
Mm,
actually this was exactly the same scenario when Jerome Powell came on 8 years ago.
mm,
He was actually appointed by Trump in Trump's first term, if you remember. And everyone thought that he's going to be the Trump man. But the moment he get on the seat, he realized that, wow, he has a golden halo in front on top of his head. He cannot die. Why? Because the Federal Reserve Chair is a appointment that is protected,
mm,
that the president cannot fire him unless he activates some special clause. But otherwise, you cannot fire him. That's why Donald Trump, for the longest time, want to kill off Jerome Powell. I mean, figuratively, not really going to assassinate him, but want to fire him. But he has never been able to do it. He only keeps saying that he will fire Jerome Powell, but he actually never did it because why? He can't do it. So the question is, does this new chairman need to suck up to the Donald Trump after he sit on it? The answer is actually no.
mm,
Actually, no. Okay. All right. Okay. So Ethan, continue from here. So each year the savings is 3,300.
mm.
Substantial if your loan is big, right? So if it's 2 million, then it's 6,000. If it's 3 million, then it's 9,000. Yeah.
And what I always tell people is that because Singapore economy is quite dynamic.
Mm.
Um, First things first, if let's just say I know there is no war already but if there is a war, Singapore definitely in the top three countries to be in, you know.
Yeah.
And yeah, we are in a very strategic location and I think because of all those factors, I feel that
Mm.
yeah, there is a lot more to the story, but I think we'll get into more discussion when it comes to the one-to-one.
Yeah.
And speaking to one, sometimes what I do, right, is I proposition my clients this thing called gearing up. Okay,
Mm.
what I like to always ask my clients, right? I think most of you will know if you all speak to me before. One of the key questions I love to ask is, got any intention to sell your house?
Mm.
And the thing is, if you have, then I will get you a clause that will say, okay, if you sell the house, you don't kena the penalty.
You waive the
If
fees, yeah.
the house within the lock-in, the penalty is 1.5%. So if
Mm.
$1 million loan, that is 100, that is
115K, yeah.
15,000.
Yeah.
$15,000. I know that's not a lot of money in terms of property transactions, but that's a lot of money to me lah. 15,000, if I
Yeah.
can help you save,
You can
that's
go on how many Hokkaido trip?
free by yourself or one family lah.
Yeah.
Yeah, so that's that. The other thing I like to share right now, because we are in a very opportune moment. Our interest rates are all below 2%, all below one, all like 1.5 thereabout. So just by borrowing money from the bank and then put the money into CPF, this is risk-free. You earn 1%. But
Mm. Yes.
to most of you, right, I think 2.5% is what you all earn in one
No
option
lah,
straight
I don't
lah.
do that lah. I don't do that. If
Depends lah.
Yeah.
Yeah.
In fact, just to share,
Mm,
recently when I worked with Ethan to sort of like optimize my loan, so it's two prong. So everybody, two things that you need to remember. One is of course you save your monthly payment, so you got more cash to invest. For me, is I do my option trades and buy my stocks, right? Okay, that's number one. Number two is when I did a gearing up, then I got excess funds from the mortgage loan to invest when the market dip, right?
mm.
So it's a twin engine approach lah to increase my ROI, right? That's why I love coupling property mortgage versus stock market, because when the stock market is very very volatile, I can tell you my property just very boring lah, just slowly make its way up, but it doesn't fluctuate as much. Therefore, I'm able to take on the loan, right? Just to talk about the gear up, right? It is a loan on your existing property. Let's say it's been paid out a bit already, right? Some people say, oh, is that dangerous? I would say, once again, talk to Ethan. But from my perspective, how I see it, right, is that I am borrowing against a very stable asset, right? So number one, the odds of like a margin call because of the price flash crash is very low, right?
Very.
Very low. Number two, the bank also don't want to margin call me lah, because the bank actually want to lend me the money on. So long you judiciously make your mortgage payment every month, actually to me it is a very stable loan to take, right? So it is not really something that will get margin called. It is a stable loan to take. Plus, right now the rate is so low. There's no way I can borrow from anywhere outside. No matter whichever bank priority relationship I have, I cannot borrow at 1.35%.
Cannot.
Right? Only through using property. Okay, so just to share with you guys how I optimize my investment. I know Warren Buffett always say don't borrow money lah, but I feel like when the market dip, it's good to borrow a bit lah. Then when the market go up, that time you sell, then you pay off lor.
Definitely. And also, right, there is also this concept that I like to introduce to you guys. This concept is the real interest rate.
Mm,
Real interest rate is your interest rate minus away inflation. So Singapore's estimated inflation is 2%. Our interest rate 1+%. You're technically getting rich by borrowing money.
yeah.
Yeah. So that's why I always do, and I always try to make my clients millionaire. I always say if I can, I want to make everybody a millionaire, but just give me 25 years. So so that's what I do lah. And for all of you that actually stayed to the end of my rant, right, I want to share with you guys how we normally do things in Unbeatable. What we always do, right, is always tell people, okay, there is a very straightforward plan. If
Mm,
you do your building under construction, this is the plan. You buy already, you reprice, then refinance, then reprice, then exit. Then if you were to do a resale, you buy already, you refinance, and then reprice, and then refinance, then exit. It is a very clear way of like seeing what to do next and to be able to give you guys a roadmap ahead lah.
mm,
So that is what I have for you guys at this point of time. You all want a screenshot, you all let me know. But yeah, that's it. Our service, me and my team are here to help. Our service is complimentary. Our objective is to help as many people as possible. And yeah, get in touch and we'll have a fun conversation.
Yeah. Okay. So, guys, before I continue with the sharing, once again, thank you, Ethan, for coming. All right. Can everyone type CCC in the chat to thank Ethan for joining us? Okay. And also, for those of you who want to optimize your mortgage, you want to save more money, Ethan easily helped me save like $1,000 a month on my mortgage, then my wife's mortgage also lah. Okay, right. So for those of you who want to optimize your mortgage to have more funds to invest, right? Here is the QR code for you, for those of you who need. Okay, if not, I also have the link in the chat as well. Okay, so for those of you who need help with your mortgage, that's why I bring Ethan on. I usually very selective on who I partner. I always want to make sure that I bring you guys someone who cares for your benefit, your welfare, right? And I'm very happy to have Ethan with us. Okay, all right. So this is the free mortgage consultation that Ethan provide, and the link is over here. The QR code is over here. You can take a picture first, then you can sign up later. All right. It is basically a Google form. All right. Once you go in, just key in your details. All right, and let Ethan know what do you intend to do. Is it a new loan? Is it refinancing, repricing, or gear up? Okay. And if you have any specific case details that is not within here, you can also put under others and explain it so that Ethan and his team. By the way, not just Ethan. Ethan has a team that's working together for all the clients. Let them know, right? The more you share with them, the more creative solutions they can share with you. Okay.
Mm.
Okay. If not, that's all I have to share with you guys. Thank you very much for joining. And once again, thank you, Ethan, for joining us as well to share with us his perspective. Okay. So once again, for those of you who like to get Ethan's help in terms of managing your portfolio of your mortgage, right? To make sure that you get the best deal. All right, right now, Ethan is having a free consultation for all of you here who are attending the live webinar. Okay, so the QR code is over here, and let me just put the link in the chat once more. Okay. If not, that's all we have, everybody. Thank you very much, right? For my SMG and DMG members, the trades already sent out to you earlier this week. Now, for those of you who needs Ethan's form, the form is over here. All right. Okay. Thank you so much, and I'll see you all next time. Bye-bye.